Alright. Let's get this day rolling. How we all doing? Job, looks like you're losing some money today. It's alright. The market's bleeding, but we're in strong fucking companies. We're in strong companies. It doesn't matter if the market's bleeding. It doesn't matter if everyone wants to go hiding under a rock. We're brave. We go find some opportunity out there. We are proactive. We are not reactive beings. That's what the 90% of betas are doing out there. They're reactive. We're gonna go, we're gonna make opportunity happen for ourselves. How about that? How's that sound a you job? Let's start with some, let's see if there's any new DAs today. How about that? That's where I like to start. That's right. We are preparing. We may not make money today. That's okay. But in our minds, we know we're making money today, right? We're finding these plays so that next year, we look back and we say, damn, I love what we did on March 23rd, 2021. I'm rich because of it. Richer then than you are now, at least. Let's see. Any new DAs? Any new DAs? DA. Bellow 3D to go public. Alright. Bada bing, bada boom job. That is exactly right, my friend. Let's see, what is this one? SPFR. Who are we going public with? We're going Bellow 3D. Guessing this is a 3D printing play. I don't know if that's the first thing I want to do today. Oh, right below it. Love this person. Renault Vacor. Biotech company developing AAV-based gene therapies for cardiovascular and central nervous system diseases. Okay, there's going to be a lot of R&D there. If 5 years from now, Open's going to be printing us some money. 10 years from now, Open's going to be printing us even more money. We got a lot of money coming our way. We just got to stay patient. We're in great companies. That's the problem that a lot of this market has, is they are not in great companies. They're in the companies that are quickly rising because they want their short-term gains, because everyone in the world, human nature, you can't knock them for it. I do the same thing too sometimes. They think short-term gain. We're not about that. We know on average we're going to live probably about 80 years or so. You know, I got great blood, so I'm probably going to live around 100 years, and if they continue developing technology and science that they have been, I'd be surprised if we didn't all live well beyond 100 years, because we'll be capable of it. Well, we will for sure, because we're going to make money in this market while no one else is. So we can afford it. But, yeah, everyone thinks short-term. They all want short-term fulfillments. We're thinking long-term. Playing chess out here. Everyone else plays checkers. Let's go make some wealth for ourselves. Let's go make some wealth for our future families. Our existing families. Alright, what we got here? We got CHAQ, and they're merging with Reno Baker. Can't even say the name, I already hate it. Electric vehicles in the real estate market. What's your EV plays right now? If you don't mind me asking, my friend. Is it Job or is it Job? I'm going to put, it's just so I can call you the right name. Job. Best way I can sound it out. SPFR stock. Obviously hasn't run anywhere yet. Fellow 3D just got announced today. So look at the investor presentation. Let's go find the terms of this deal. NEO and XPEV. These are both Chinese EV plays, right? Help me try to pronounce it the correct way. Yeah, because we're used to just seeing it like job, like working. And I want to make sure you're a friend. I want to call you by the correct name. That is, in Dale Carnegie's How to Win Friends and Influence People, the name is someone's most important asset. Is the one thing that belongs to them and only them for all their life. So it's important that you remember people's names, and it's important that you get their names right. That's a high market cap. Got press releases. I don't really want a press release. I just want the earnings. Don't give me the words. Where's your balance sheet? Where's your income statement? This is why I'm always hesitant on foreign companies. Not all of them will release their balance sheets and income statements. Okay. Alright, I want to run this really quick. I can run it. What's going on, Brogan? How we living? It's money time, brother. It's money time. What are you doing up until 4 a.m. chart, bro? That's when you gotta wake up to go chase this money. Market's not gonna move at 4 a.m. That's the hardest thing that I had to accept too. Market's not moving. We're preparing for the next day. So we gotta get to bed earlier, wake up earlier, prepare for the day ahead of us so we're not sleeping when the market's open. Alright, I wanna go. This is 3 months ended. Oh, this is in USD. Okay. 2019, 2020. But cryptos are open. You got me there. VeChain, brother. What you thinking on VeChain? I'm already up 100% in my first month there. I'm loving where I'm at. I had a choice between that and ADA. I'm not trying to gloat. But, could have gone either way. China has the biggest market in general, I think, right, in terms of population. So anything you can get in there is a great play. It's a matter of finding the right play. And anything that's government backed, VeChain is government backed, by the way, if you're into crypto. Yeah, I love VeChain. So if you're not into crypto or you need some more guidance on crypto, let me know. Sorry, I'm trying to sort through this while I chat. See what kind of numbers we're looking at over here. I'm gonna have to convert the RMB, but I will do it for you. I'm gonna go with Job now. Job. Alright, let's just start with the balance sheet. I'll convert all the numbers. I need a challenge. I haven't done a public company in a day or so. I'm going to bring up my sheet. I'm going to bring it over to my computer. I always forget it's VeChain, but wanted to ape to extended. Beacon seal of approval. Love it, bro. Appreciate it, brother. No, VeChain I like because I didn't want to head like I saw ADA and Cardano. Sure, I know you're investing in a project, right? And it could be the future. It could be that Ethereum doesn't do what we think it's gonna do. Literally, if I wasn't so hot right now, so hungry to make some money, I'd be repping my Ethereum hoodie. And I spilled coffee on it this morning, so I can't really rep that either. But for that reason. But I'd be repping my Ethereum hoodie. That's my biggest holding in crypto, as you know, Brogan. Got Bitcoin obviously too. I don't try to wander into the altcoins, but I think Ethereum's going to do what they're trying to do. I believe in the future of it. I believe in how far they've come. I believe in the leadership team behind them. And EIP 1559 was a great booster in the interim as well. All right, so why don't we do this? Let's do Neo then. I want to be able to break down a company for you before I dive into the new DAs, because these aren't going to move before we start talking about them. We'll start moving, some other time. But ADA, I saw Cardano as a hedge against Ethereum, and I don't have any reason to think that I want to hedge against Ethereum. I think that Ethereum 2.0 is going to do everything that Cardano is attempting to do. I think Ethereum's fine. The reason I like VeChain, though, and I was willing to dive in there, is because they have a ton of high-level partnerships. They've got Chinese government backing. They're solving a different problem that Ethereum is not solving, right? They're solving a supply chain problem that we know exists. In addition to the typical supply chain issues, they're solving counterfeiting issues, right? Big issues. The person who created VeChain in the first place is the former CEO and founder of Louis Vuitton China. So who knows counterfeiting better than Louis Vuitton China's CEO in the country that does the best counterfeiting in the world? That's why I liked VeChain a lot, and that's why I dove into VeChain over Cardano. I didn't think I needed to hedge it, and then Cardano, I know it's just a project, but it's very underdeveloped, right? Smart contract capability, not there yet. Technology doesn't really work yet. People using their platform, not there yet either. And that's why you get this big risk, this high risk, high reward, and getting into a company like that early in the event that Ethereum does fail. And, if I start to have any reason or any reasonable doubt that Ethereum is going to fail, I'm more than happy to hop into ADA Cardano at $5 a pop. I don't really give a shit. If that's the move, I pay. Just like a couple months ago, I paid $900 for an Ethereum because I believe in the future of it, right? I've got my holdings. I think my average is around like $200 or $300 on Ethereum because I got in early enough, fortunately. But yeah, that was my reason for not getting in there. Let's see. EIP 1559 slabs. Bitcoin is our love. Of course, ADA is decent hedge, but also crypto hedging is a different term than stonks. Yes, yeah, crypto hedging is very different than stonks. I would agree with that. Let's see, quarterly results. How did we do, Neo? Cool cars. Alright, let's go look for our assets. Found them. Okay, I'm probably gonna have to convert these from RMB. Yeah, they do it over here, but this conversion has changed since then. Let's get a up-to-date one. That's the challenge as well, is you have to convert them and you have to always go back and reconvert them over and over again. But Job, I already made I came to terms with myself. That's what I'm calling you from now on until I figure out the correct way to say it. But that's the most correct way I can think of. Job. I appreciate your support. I appreciate you being an open door gang. I'm going to do this one for you too. Let's break down the numbers here. Alright, so what do? They do EV. And then we got this is current as of 3/23, 2021. current stock price is, get the most updated price so we can get the most updated market cap. Pretty high market cap, I will make note of that already. 41.62, and that is a $65,450,000,000 market cap. Yesterday's close was 42.94, so we are down about 3% today. It's all right. Everything's down today. Let's go see what's going on over here. Let's go analyze these results. All right, 2020, 2019. Yeah, they do it like backwards compared to most of them. All right, what do we got? Total assets. Way up. They just had their offering this year, I'm pretty sure, right? I don't know if did Neo go public through Spac, or do they go public through traditional IPO? 129, 123. Total liabilities. Down here. We got 3 zeros at the end here, so this is 2020, 2019. So current year, we got 22 million Chinese yen. Total liabilities previous year, slightly down. Very excited to see the American numbers here. Debt to asset ratio looks very healthy. Let's look at our current ratio. You want to do a quick Google search for me, Job? Can you just look and see if they like how they went public? Were they brought public through a SPAC merger? Were they brought public through a traditional IPO? Now, current, these are our most liquid assets, right? Everything in terms of liquidity, always on our balance sheets. Same thing for liabilities. These are going to be assets that can be liquidated in a year or less. Those are our current assets. So 2020, 2019, you can see we just had their IPO this year, whether it be through SPAC or traditional IPO. We have a bunch of cash that just got infused in the company. So we're going to put this down, 46, 206, 817, 123. And our current liabilities are 13,976 billion, 13 billion. Gotcha. So we got a great level of liquidity there, well above 3. Looking for anything above 1.2 typically. So a value investing conversation last night on Clubhouse. 1111 guys, make a wish. Was a value investing conversation on Clubhouse last night. It was, interesting discussion, and I totally agree too. We're looking for current ratios. You're typically looking for anything 1.2 or higher, but the newer the company is, the less established they are, the higher you want that ratio to be. So we're looking for things that are above 2.0 in those instances. This is a new company. EV play doesn't have a whole lot of certainty behind it right now. We just know that EVs are the future. Who's going to win? We don't know. Could be Tesla that just ends up taking the entire cake. Oh, thank you, Savvy. Yes. Please, if you guys have not already, smash that like button, smash that subscribe button, and ring the little bell next to it so that you get notified every single time we drop new videos, every time we go live, and we're making money up in here, which is every single day the stock market's open, folks. All right, back to Neo. They filed for IPO. All right, thank you, Joe. Appreciate it, my friend. All right, let's look for our stockholder equity. They got mezzanine equity, so these can be things that are redeemable. We need to find our shareholder equity. There we go. This is it. 27, 170, 156, 123. And then last year we were at a deficit of 6 million right here. 277, 599, 123. So we are definitely going in the right direction. That's what happens when you have an IPO. When you have any kind of offering, you're going to get a bunch of cash infused in the company. Do we have any preferred shareholders that we need to take care of? Nope. $0 in the preferred. Then we're going to look at outstanding shares. That should be down here. 2019. We need this number. We'll add, I think 3 zeros at the end there. Oh, except for share. Okay, so no 3 zeros. So we're going to do 1,421,000,000. This is what makes it scary, guys. There's a lot of shares out there. I got to make note of that. That is over 1 billion shares. You don't really see that often. They go into Europe this year, into America in around 5 years. NEO is. I'll be interested to see that if they're a Chinese company and they're trying to bring their cars into our country. China and America don't really have great relations when it comes to auto imports and exports. They don't really let our cars in their country, and how many Chinese cars do you really see driving around our country right now? Nothing against them, it's just how it works currently. Not saying it's right or wrong. I want to see their full year results if I can. Oh, very nice, I can. So their 2020 annual. We're going to add 3 zeros to the end of it as well. This period, last period. Revenues, what's our top line? 6 billion yen. Nice. This is Q4. Last year we did just under 3 billion, so we are way up. We'll see the real numbers in a second. Let me get the net income first, or net loss. We want this number, it's attributable to us, I guess. 1,492,170,123. We lost 1 billion yen. And the year before, what do we do? We lost way more yen. We lost almost 3 billion yen. Alright, let's go look at the annual totals down here. 2020, 2019, total revenue. $16 million yen versus previous year we did about half of that, 7,824. So they are scaling up. I like what I'm seeing. Don't know about the future horizon of the company. Would I agree with that? All I'm doing is plugging and chugging the numbers here. We want this number. This is attributable to us as shareholders. $5,610. So we lost 5 billion. And the year before, on way less revenue, we lost 11 billion. Interesting metrics here. We'll see that our profit margin is going to go in the correct direction. Not profitable yet, but that's not the end of the world. Put the link to the report in here. And we're going to go convert these numbers into USD, because that's what's going to give us the ratios we need. Okay, what do we got? Gonna need it correct that Neo is moving to Hong Kong? Job, you are the co-owner of this company, my friend. Are they moving to Hong Kong? 0.15, okay. Alright, we got our numbers. Okay, so our profit margin. Well, let's start from the top. Can you all see these numbers are alright? Let me make them a little bit bigger. Zero in. We've done Neo before. What am I doing? Oh, God, I'm a moron. What is this? Is this their annual? Oh my God, that is waste everyone's time here. My bad, guys. You can see what happened too. The conversion rate changed a little bit. Oh, it was 0.15. I don't know what the deal is here. All right, Neo. Book value per share, we're looking at about $3. We're trading about 14.5 times that. There's a little bit of room for concern there. That could be considered fully priced or overvalued right now. Not to be too concerned though. I told you 65 billion was a high market cap to see. I told you they had a lot of shares outstanding, comparatively speaking. We're looking at for assets. We're looking at $8 billion in U.S. assets, or U.S. dollars in assets. Previous year, we're looking at over $2 billion. Our total liabilities have gone up to about $3.5 billion versus previous year being around $3 billion. So that's okay. The assets have increased substantially. Liability should go up with that. You should start trying to buy more things to grow your company. Current assets. This is our liquidity. We're looking at almost $7 billion in assets or current assets versus only $2 billion in current liabilities, gives us a ratio about 3, which is very healthy liquidity. Stockholder equity, we're looking at $4 billion this year versus last year we're looking at negative $1 billion. A stockholder deficit, as they call it. So definitely headed in the right direction. Billion outstanding shares. You can see why I was concerned. None of these companies even come close to that. This is their 2020 annual. Current period revenue almost $1 billion in Q4 2020 versus $500 million in Q4 2019. This much in the right direction. Full year 2020 we did $2.5 billion versus full year 2019 we did a little over $1 billion. So we are substantially up there as well. Net income. Net income negative $250 million versus last year negative, or 2019 negative almost $500 million. So definitely headed in the right direction there as well. We did way more revenue as well. Same story over here. Profit margin. This is Q4 2020, Q4 2019. negative 22% versus negative 101%, full year 2020 versus full year 2019. If you're not profitable, we got to make sure we're heading in the right direction at least. That's all we're looking for in this report. For shareholders, we believe in the company strongly. Just make sure these numbers head in the right direction every time. So you got negative 34% in 2020 for the annual, and you got negative 145, almost 146% in 2019 for the annual. I'm just going to take this. I'm going to wipe this clean because we don't need it. I just did this for no reason. I already did it. And no harm, no foul. No harm, no foul. All right. Let's go Spac hunting. Job, did that was that helpful for you? Let's see. Joe, people went crazy over dropping production, didn't realize Chinese New Year, nothing moves to be expected. Chinese New Year, if you take that out of the equation, they had expectations. Is that what you're saying, Savvy? Yeah, Job, if you're not familiar with my man Savvy, I know you've probably seen him here before. I've said it before, and I keep saying I'm only going to say it one more time, and then no one wants to listen. They don't call him Savvy Money Show for no reason, folks. Listen to the man. He knows what he's talking about. Well, what is your PT for Neo? What do you mean, price target for Neo? I mean, I haven't done nearly enough due diligence to get an accurate price target for Neo. I don't know what their competitive advantage is over any of the other EV plays out there. I think, one that comes to mind, for example, would be they're in the China market. They're backed by the government versus a lot of EV plays out here. They're not in the China market. They probably are never going to be in the China market. They don't have a billion people buying their product. We do want access to those markets, so I like it for that point in general. What are some other Chinese automakers though? What are their current prices? I guess who's the biggest automaker in China? Honda. SAIC, right? That one's the one that just partnered with my boys, Luminar Technology. They're going to have Luminar's self-driving software in all of their vehicles. Very excited for that. Dongfeng, FAW, Chang'an. Chang'an. Shanghai General Motors Company. It's them formerly. Okay. Is SAIC publicly traded? Do we know? So they got a market cap of $240 billion. Is this correct? Is this right? I don't know. Um, I'm not saying they're going to reach this level. I mean, look at, they've been around for almost 70 years now. Um, so I'm not saying they're going to reach that. But if Neo can be, you know, if they can be reasonably successful compared to any of these companies in China, like Honda's going to be a tough comparison. Buick will be a tough comparison. Toyota will be tough. You're going to want to know. You got to find a realistic comparison here, right? You got so many other automakers ahead of you. Um, and the thing with EVs is it requires a lot of energy, right? They're going to require a lot of energy. They're better for the environment, but now the question becomes, does China have enough energy? I believe so, but they also have 1 billion people. If everyone transitions to EVs, it might pose a large risk for them, or a big challenge, I should say, not a risk. Hmm. I don't really have a price target here. You know, if you want to think like most optimistically, you can compare it against SAIC. Um, let's go against one of these brands. Let's see. It's not going to be Honda. Maybe Buick would be a good comparison. Maybe Toyota, Nissan. I don't know what this company is. Baojun. Baojun. Of course you did, Savvy. You always sell the top. It's not no stock. Chang'an. 73. Okay, this is more realistic, I think. Let's see what theirs was. It was like 30 billion, right? Oh, nope. This might be your, honestly, they've got so many shares outstanding, guys. This might be your top. I don't know how much higher they can go. Like even the top automaker in all of China is trading at, what we saw, they're trading at 240 billion. If you think that they're ever going to reach that, it's taken them 70 years to get to $240 billion for a market cap, guys. Um, they're just not bringing in these kinds of numbers in order for that to be the case. If it was, and you want to think optimistically, excuse my yawn, was up late last night. If you want to think optimistically that they're going to exceed, you know, what this company has done in the past 70 years, let's say it quadruples in price. You're like, I mean, that's my price target. Let's say the most optimistic I can get about this company would be 160 bucks maybe. I'm not gonna ever put that out there publicly as a price target. Don't ever. If anyone's watching this right now, that is not my price target for this company, not by any means. Um, yeah, I mean, you might be near the top, honestly, if you're still in this. Ugh. All right, I'm done yawning. I told myself I'm done yawning. Let's go find this investor presentation. This one just got announced today, guys. DA just got announced. It's between SPFR and Velo 3D. You only have two what left? Alright, that was the yawn I needed. That was the last one. Okay. Let's see. Fellow 3D, they do 3D metal printing for mass adoption. $48 patents. Love that. Annual recurring revenue, 38% of this in 2026. That helps find an intrinsic value in companies, right? So that's also projection. Blue chip customers, SpaceX, Honeywell, great customer list. Love that. Key investors, also SpaceX, Costa Ventures, we know them. All right, let's find our transaction overview. Let's start crunching some numbers in here. Can't call it a SPAC hunt if we're not going to SPAC hunt, right? These are their competitors. DM, Desktop Metal, that is a Chamath company. Mark Forge, we have them on our sheet as well. Berkshire Grey, this is it's another Chamath company that I've been looking into potentially investing in. CBD or ABED. Are those public? Savvy? Alright, just give me the transaction overview. Enough of the chitter chatter. There we go. What is going on here? There we go. SPFR, they are going public with Velo 3D. They are a 3D metal printing company. Alright, our enterprise value, they're saying the company's worth today, is $1.614 billion. What it's going to be worth after this deal finalizes, a little over $2 billion. Once they get their cash infusion, this is current as of the 23rd of March. Current price, while we're running with this, let's get an updated stock price. Drum roll, please. Looking at 10.09. Bad data announced. They have not moved at all, which is good for us. Gives us more time. Was at 10.68 yesterday. Okay. People must not like this merger target. What are we getting in this? We're getting 16.5%, and founders and sponsors are getting 4.1%. We don't have to account for this. Let's go find some revenue. 2020 actual. We're going to do the 2026. We'll do 2020 actual, 2022 projected, 4 projected, 6 projected. All right, 2020. What are we seeing? We're seeing 26. I believe this is million. Well, it should be specified, but we'll just say it's million. We did 19 million in actual revenue in 2020. In 2022, we're going to do 89 million. 2024, we're going to do 296 million. And in 2026, we're going to do 937 million. That is for 2022, 2024, 2026. That's going to give us a compound annual growth rate of, drum roll please. Awesome. Thank you, Savvy. I appreciate you as always, my friend. 19 million all the way to 937 million. We're going to do that from 2022. 1, 2, 3, 4, 5, 6 years of growth priced in there. It was a CAGR of 91.5%. That is from 2020 to 2026. What's our TAM looking like? Where's our market opportunity here? Proven land and expand. I love land and expand strategy myself. It is super effective. If y'all are not familiar with land and expand strategy, let me know if you want me to elaborate on it. I can elaborate on it for you. Or if you want to do your independent research, do your independent research on it. If you're in sales at all, if you're running your own business, it is very valuable stuff. Thank you for pointing that out, Savvy. Yes. If you want access to the spreadsheet, which I'm going to pull over here after I get the numbers from here, I just don't want to be staring at you guys. I love my face. I don't even love it enough to watch some dude stare at me intently like this while I'm looking for numbers. So I'm looking for numbers over here, punching in the spreadsheet over here. I'll bring it over here at the end to give you a nice little overview of what I'm doing. But all the numbers are available on my website as well. Oh, my favorite price, $3.99. Yes, free while supplies last. If you need help getting there, check the link in the description below. 5-minute long video I made for you. Pretty easy, self-explanatory process from there. All right, we gotta find our TAM. Okay, I'll make note of this. This is slide 17. Competitive advantages. Okay. So the market currently is only 2 billion. 101 billion. That's confusing. Alright, let's hit these numbers. Well, I don't know. Do they do the entire metal market? They gotta. There's no way they get valued at this. Yeah, they definitely do. They do $101 billion market. We'll look at their competitors in a second. Get the link to this on the sheet for y'all so you can do your own investigating. Notes. Let me make note of this TAM really quick. Um, 101 billion dollars. 2019, 2 billion for high value metal market. Projected to grow to $180 billion by 2030. 35 billion for metal AM market. See, I don't understand this well enough to invest in it myself. I don't think so. I'm just gonna put these notes in here though. Make sure I give you guys everything you would need if you know this market better than I do to be a good investor. Customers. Make note of this. Base customers. SpaceX. Pretty impressive customer list. Scott, how are you, my friend? How are you doing today? Are you making some money? Sure. Also got our aviation defense customers. That's going to be Raytheon, Honeywell, Primus, Aerospace, Kratos, Triumph Group. We're going to have our energy customers. Everyone's bleeding today, Scott. It's all right. I'm not bleeding that bad. I'm not gonna gloat over here. I do have my days where my portfolio looks worse. That's all right. These are the days where we're looking for opportunities. When everyone else goes and they hide under a rock because they're scared, we're here. We out here. We're gonna watch the bleed. We're gonna let it cut a little bit further. We're gonna feel that pain. And we're gonna go look for opportunities that everyone else is panic selling off right now. They can't lose anymore. We're still doing velo right now. We're looking for opportunity though. Everyone else is scared. They're not looking for opportunity. We're not scared though. We've been here before. We're gonna find more opportunity while everyone else sleeps. Mitsubishi. Pinocchio, Phillips, Mitsubishi Electric, Loser, Schlumberger. You are welcome, Job. No problem at all, my friend. I do have Neo on my website as well. It turns out I already did that once, so I spent some time going over it again and just re-entering the numbers there. But my conclusion remains the same. Elliott. They have so many customers. It's actually very impressive. Nust. Godwin. I am like critical engineering. How about this one? Other. Last one. Honda. Lamb Research. Strata. Sys. Tobacco. Tayo. Nippon. Sanso. PWR. Morelli. Jabil. Go Engineer. CRP. Cool. That is all of our customers. Put a little note in here. See slide 17 investor presentation for full list. There we go. All right, let's save that. Let's go look for our competitors. I remember seeing them. I know Honeywell, I think they said was one. DM is another. Not sure what this is. About pre-orders, bookings. We'd love to see that for intrinsic value. How about our team? How's our team looking? Complete team, ready to scale to next level. Don't know if you know anything about 3D printing or metal, but this is their experience. I don't know enough to speak on how confident I feel in them. Investors, let's do this one actually. Independent board members. The team behind us, who's driving us forward, guys? Who's backing us? This is one of my favorite things to think about when you're investing in a company, or when you're partnering with a company, or you're looking to do business with any company. The question that used to get, or the cliche saying that used to get posed to us when we were starting our first company was, who are you sitting with, right? Who's at the table with you? Am I sitting with well-established people who have great networks, people who have great experience and success for their own? Or am I sitting with people who are scam artists, have never started a successful company, have only embezzled money from investors before, don't know what they're doing, have no really good experience, don't really have any success? Obviously, there's in-betweens as well, but if I'm I want to sit at a great table. I want to have great people around me. That's why I invest in Shamoth companies, I invest in PayPal Mafia companies. I have great fucking people around me, and I feel that much more confident that I'm making a good decision because I'm thinking the same as the smart people are thinking. People who are way smarter than I am. Carl Bass is an independent one. Carl Bass, Stephen Cross. Oh, I'm not calling anyone in particular a scam artist. I didn't want to throw that out there. If you want me to throw a scam artist out there for y'all, Henrik Fisker, he's a scam artist. I don't want to have a chair at any table that guy's at. He might design awesome looking cars, but he's a scam artist. He cares about the dollar. He doesn't give a fuck about the consumer. And you can't win this game if you don't care about who you're selling to. So I wasn't trying to talk on Henrik Fisker. I've definitely gone on my spiels about him before. That was more so like an indirect comment before, but yeah, if you want a scam artist name drop, I can throw them out there for you. I got no issue doing that. That's what happens when you're a scam artist. You got people that talk about you. Trevor Milton, another great scam artist. Husky J, how are we doing today? We making some money today? I'm not even gonna give you the numbers. Just throw your typical numbers out there, and I'll have to decipher them with how many of them I see, and do a few calculations in my head, and I'll figure out if you're making money today or not. And bada bing, bada boom. Yep, he rushed out cars that he knew were not safe. Cars started spontaneously combusting on people, blowing up because the batteries weren't safe, and he knew that. But to hit his deadline, he pushed them out anyway, and put people in harm's way, which you can't do if you're a company owner. That's not ethical. So you don't want to invest in companies who are run by those people. You want to invest in companies who are run by ethical people, people who do care about their consumer, people who do care about the safety of the public. Strategic investors are SpaceX, and then Lamb Research. We're going to do one more round. See slide 41 in investor presentation for info. There we go. 777. So, all right, Savvy, I need you to crunch some numbers for me. He gave us 4 sevens today. Is Jay making some money today? Is he not making money? Is he neutral on the day? What's going on with Jay? The market's not doing much. Yeah, the market's kind of just chilling. People are bleeding. People in bad companies are bleeding. I'm not bleeding. I hope you guys aren't bleeding. I know Savvy's not bleeding. You don't get to be called Savvy Money Show for no good reason, folks. Ooh. IEA. What's IEA? Alright, we gotta look for the competitors right there. Jay's losing money. Jay, is this true? Are you losing money today? Give us a 7 if you're losing money today. I don't even have to feel bad laughing at that. I've watched Jay make $100,000 in like 2 days. Sorry, Jay, I didn't mean to publicly say that. This is back in the Tesla thing. That's not typical. This is Tesla pre-split. I got no idea what his portfolio looks like now. I take that off the record. I'm talking my ass. But I can definitely laugh about it. He's been there with me where I've lost a shit ton of money like 10 days in a row on trading. The whole time, all you can do is say "we," and can't stop buying spy puts, and then 2 minutes later he's buying spy calls. It's like, I don't know. He was broken for a little bit. That's why he went back to work. Chump change to J. Yes. Proto Labs. Alright, and then we've got our tech-enabled companies. And attack. He's like, you're right, I shouldn't be hiding right now. I should be out there buying spy puts and calls. That's what I was born to do. Rockwell Automation. I'm just going to finish typing this out, and I'll have a little well-rounded opinion for y'all. Legacy AM. It's going to be 3D Systems and Strata Sys. See slide 45 in investor presentation for more info. There we go. Here's your comparisons. I do not have any Pokemon cards, Jay. I do not, unfortunately. I did not get in early enough. These are one of the things after the crypto boom of 2017, 2018, I told myself I wouldn't FOMO into getting into any of these markets. I'm okay watching my friends make money. And I hope you guys make way more money than I'm even anticipating that y'all make money, but I really don't have any interest in getting into the card market myself or the NFT markets. I've learned my lesson. FOMOing into plays that everyone's talking about. I don't have NFTs. I went over my strategy yesterday with NFTs. Let me finish taking these notes out over here. We're going to start to see who the winners and losers are of the NFTs after this crypto boom ends, after the market crashes, and people need money. They need money for their bills. So here's the thing, Jay. I didn't get Pokemon cards when I was younger. I was a big Yu-Gi-Oh guy myself. I sold them when I was in like 8th grade because I wanted to buy an Xbox 360. I got a calculator when I was a kid. I mean, I wouldn't be surprised. I'm sure I got some calculators. My dad loved counting when he was a kid. I'm, different than my father in a lot of aspects. But I do love numbers. I've always been good at math, like mental math. As soon as you started throwing like the hard math in there, like the rocket science kind of shit, or like, when the letters got involved, that's when I started falling behind. But yeah, I was big into like WWE action figures. If those ever blow up, I'm gonna be stupid fucking rich. Um, my my Yu-Gi-Oh cards I sold when I was in 8th grade for an Xbox 360. I think I made like $50 on well over. I think there's almost 1,000 cards there, and they were like high-end cards in there also. I don't know what the market is for Yu-Gi-Oh cards today. I know Pokemon is blowing the hell up though. And my strategy here is I'm going to wait for the boom to end, and I'm going to go and I'm going to scoop these cards from people who are trying to sell them once this rush is over, and I'm going to hold on to those for another 10, 15 years, and I'll wait for the next rush, and they'll be worth way more than they are today. But right now, what I'm thinking is I'm going to be buying towards the top, and I'm not trying to time any market ever, but I think I can. I think I can time this one. I think this is going to come in cycles as well. And I don't want to be in this cycle. All right, so TAM, a ton of high level customers, investors, decent size TAM. They highlight competitive advantages. This investor Let's see, we've got a bunch of competitive advantage slides. Start from the top. Jay, what's your take on the market? What's your stance on the cards? Do you have any Pokemon cards? slides 15. Have them, I don't know what they are. What good are they if they don't know where you are, or if you don't know where they are, Jay? For those of you who don't know Jay is fucking hilarious. I can watch this dude fly a plane on Flight Simulator for hours. He is the best pilot I've ever had in my life. Should we go rogue? Should we start looking at Pokemon cards? Abandon the Spac hunt midway through and go look at Pokemon. Ooh, I didn't even see this partnership. Let me add these. Okay, what do we got? We got Tayo Nippon Sanzo. Baco. We've got DKSH, CRP, and Go Engineer. Come down here now. We need to do space. This is, I mean, if you guys want to know why I do this now instead of my bullets, I can show you in a second. Just about like how it shows up on my website. So we got those. We're looking for any competitive advantage slides. We love recurring revenue. Asset light business, low overheads. We love that. They're not going to show us. We don't want a EBITDA though. This is earnings before what? Interest, taxes, depreciation, and amortization. Interest and taxes. We got to pay interest on our debts, don't we? Why the hell do we want to know about earnings before then? Pay the debts. Okay. Interest before taxes. Well, we got to pay taxes too, don't we? Tell me the number after we pay our taxes. Depreciation. How we write our taxes, or how we write off our property from our taxes in our business over time. So our earnings before we've written off that expense. Well, we had to pay for that somehow, didn't we? Yes, we did. All right. What about amortization? Those are like the same thing as depreciation for the most part, but they're intangible items, right? Like software would be a great example, and that becomes subjective, so they can make their numbers look better. So why do we want subjective numbers? We want the hardcore numbers, right? You know who preaches EBITDA more than anyone? Companies that ain't worth shit. Companies that aren't profitable. They preach EBITDA. And we're not going to get fooled by their ways while everyone else in the market obsesses over their ways. So we got team slide is on 40. And, all right, 46 is another competitive advantage one. Do we like this company? Pull this up full screen really quick. Let's get a nice, well-rounded answer for y'all. The moment you've all been waiting for. This is SPFR. They just announced today they are going to be merging with Velo 3D. They do 3D metal printing. Valued them before this transaction at $1.6 billion. After the transaction goes final and they infuse this cash into the company, they're going to be valued around $2.1 billion. Price at the start of when we started punching all this information in here, it was 10.09. Don't know what it is right now, but it's down about 60 cents from yesterday. The close yesterday before this was announced, so not a great start if you think the company is high value. And I saw a lot that I do like about this company. I'll get into that in a second. This market cap we see today at 10.09. We're getting 16.5% of the company for public shareholders, 4.1% for the sponsors/founder shares, so a total of 20.6%. Gives us a post-merger adjusted market cap of $2.1 billion, so it really has not moved from right here, the $2.086 billion. I'm typically looking for a 2 to 3 time multiple of that. That's considered healthy in my eyes. Anything beyond that, you start to see speculative growth priced in there. By the way, if you guys haven't already, before I continue here, please smash that like button, smash that subscribe button, and ring the little bell next to it so you get notified every time we go live, every time we drop new videos. And we're making money up in here, which is every single day the stock market's open, folks. All right, even when it's red like today. So we did $19 million in 2020. This is 2022. We're supposed to do $89 million. 2024, almost $300 million. And 2026, almost $1 billion in revenue. Gives us a compound annual growth rate of 91%. Look at this comparatively. I'm looking for anything like 40 and below I would consider to be conservative. Just compared to some of the numbers we're seeing. We'll see some of the numbers up here. We got 100% there. We've got, we got like 200% right here. Almost 300%. That's where you really have to start questioning the numbers that they're out projections. Train your eye for that. If the projections are conservative, I've put together these presentations myself. Even when I've told myself these numbers are conservative, they're not conservative, right? They're not worst case scenario numbers. These are still everything goes to plan, but it's just, like plan C. We didn't get everything we thought. Look into their numbers, see if you believe them. Do your own research all the time. This growth rate is from 2020 to 2026. Total addressable market is $101 billion. How big of a pie we're getting, or we're trying to get a piece of? We're always looking for a bigger pie, right? We want to be, if we can get 1% of a $100 billion pie, we're going to make $1 billion a year. If we can get 1% of a $10 billion pie, well, it's a little bit less sexy of a play for us, right? There's better opportunities out there for us. So like if you look up here, this one they didn't give us a TAM, unfortunately, but this one had a $40 billion TAM. Some of them had like $1 million. This is a $10 billion one. Like, I want nothing to do with the $10 billion TAM. That's not sexy, right? If I get 1% of that, well, my company's going to do what? 1% of 10 billion. Is that 100 million? Yeah, $100 million in a year. It's a good company, don't get me wrong, but there's better companies out there that I can get for a better price than that one. So I'm always looking for a big pie. 101 billions, it's decent sized. These are their competitors. Advanced manufacturing, tech-enabled companies, legacy, AM. I forget what AM stands for because I'm not familiar with this industry that much. I'd like to be, so I might dive into it, but just don't know enough about it yet. These are their partnerships they have. They're always looking for good strategic partnerships out there. It tells us that they're making moves for the sake of growth. These are their customers, everything down here. Space customers, SpaceX. You can see some big names. Astra's getting brought public right now. Aviation defense. You've got Honeywell. I think we all know them. Primus Aerospace, Raytheon. Energy. We've got Siemens. We've got Mitsubishi Heavy Industries. We've got Mitsubishi Electric. We've got Conoco. We've got. Well, I'm not too familiar with that sector myself. Beyond there. Other customers that they have, they've got Honda, LAM Research, who's also an investor, same with SpaceX. Stratasys, who you see up here, I'm pretty sure, is Stratasys. They should be an investor, I believe. Where are they? Were they a competitor? Oh, they're a peer. statuses. They're a peer, but they're also a customer of theirs. Good sign. Um, this is one of their distribution partners. You see right there. That's Tayo Nippon Sanso. Don't know if I'm saying that right. Go Engineer and CRP are also distribution partners. So they're getting the partners are becoming customers of theirs, which is really cool to see also. Independent board, you can see all this information there. You don't need me to go over it again, but yeah, you've got strategic investors or investments from SpaceX, who's a big customer of theirs, in LAM or Lam Research. These are some pretty noteworthy financial investment groups as well. So take a look at those. I mean, that's where I was really impressed. I think if you can win this $100 billion pie, and I think that they might be able to, then they're going to get way more than 1%. I think they might get, like 5-10% of that share. So if they're getting $100 billion and they're getting 5% of that every year, looking at $5 billion annually, this company's going to be worth way more than $2 billion. They're going to be worth way more than, the price we see today. I don't know enough about it to make that investment. I would need to do more research on my end. But I do like a lot what I saw. Let's go over here. Jay, are you still with us? Pokemon cards were hot before, then kind of faded. Now they're popular again. Not sure. I'll never print first editions again. So there's that. Jay, you do know a picture of a naked woman in a Pokemon mask is not a Pokemon card. Pokemon cards. I'm gonna get ads all over my social media now for Pokemon cards. What am I getting myself into? Oops. Let's go on eBay. How about that? Looks like prices are getting driven down, guys, too. The way you got to picture this market in any market is supply and demand always. And, there's a lot of other factors, obviously, in different markets, but supply and demand will bring you to your roots. What's creating the demand for this, and where's the supply coming from? And now we're starting to see a point where it's really interesting to me. The people who are the supply are also the demand for this product right now. They're the same ones who are buying this because they think they can get rich off Pokemon cards because they're seeing everyone around them get rich off Pokemon cards. They're making a shit ton of money off Pokemon cards and sports cards or whatever, the fucking cards you want to, plug in there. So it's not a unique market compared to anything else we see, but you're seeing the people supplying it are the ones who are creating the demand for it as well. And what's going to happen when the people supplying it can't sell their cards anymore? They're not making money on these cards, so they're taking losses on them. Are they going to continue buying cards? No. It's going to die out again. It'll come back. But when it dies out, that's our opportunity. I think I can make some money here in the future, for sure. So I'm going to set aside, some buying power maybe. And then once everyone stops talking about it and they're like, oh my god, I lost a shit ton of money on Pokemon cards, that's my cue then as an investor to go look on eBay and find all of these selling for like $2 for a whole lot. People who are saying, I've literally got 5,000 Pokemon cards that I need to get rid of. Because I paid a lot of money for it. I'll pretty much take anything I can get for it. They're not really worth anything. Same thing happened with the altcoins back in 2017 and 2018. That's where I learned my lessons. Alright, so that's Velo 3D. What do we think? What do y'all think about Velo 3D? Who else is making some noise today on the Spac channel? What'd you say? You said CBD, right, Jay? You wanted to see, I'm sorry, Savvy, you wanted to see CBD? Biggest Brazilian company engaged in business retailing of food. This is the one you sent last night. I remember that. Let's see if they have any recent filings. Sorry, gotta get a good stretch in. Alright, so this is the tricky part. Yeah, what are we gonna have to convert from here? There's no way in hell it's gonna be American dollars or the US dollars. No way in hell. But we're always up for a challenge now. We gotta flex the old noggin. Reyes, okay. What is this? Alright. So we had 6 zeros here. Reyes. Reyes? I don't know. We need to take this number, I think. Yeah, the consolidated number. We want their total. What's going on, Trouble? This is CBD is the ticker. This is a Savvy one, so I'm always happy to look into companies that Savvy recommends. They don't call them Savvy Money Show for no reason, folks. Interesting. This is going to be our statement of operations, so our income statement is going to be operating revenue. This is a Brazilian company, but they are the biggest Brazilian company engaged in business retailing of food, general merchandise, electronic goods, a whole lot of other things. So am I investing in this company or their parent company? That's what I don't understand. Because if it's not their parent company, I don't want to know what their consolidated assets look like. I want to know what they're bringing in. They're making it super confusing. Consolidated, we did what? Doesn't make a whole lot of sense. Once I understand this and decipher everything over here, I'm gonna be able to plug these numbers in real quick and get us a nice breakdown of it, but I do want to just understand it before I start plugging and chugging. Net income attributable to controlling shareholders for thousands of shares. Okay. Jesus. How many outstanding shares? Where's our outstanding shares? The cash flow statement. We don't need that. We need our revenue. That's usually where our shares can be found. Interesting. Not gonna be in there. I'm gonna just have to do some math. Yeah, we can do math. We'll math it out. We'll be okay. Alright, back to our assets. Now we're gonna start plugging and chugging. We'll make this quick. I'm gonna bring this over here again. Don't want y'all to just think I'm staring at your faces. Like I said, I love my face, but even I don't love it enough to watch a stream where the guy's just staring at me like this while he tries to find numbers intently. Alright, this is for CBD. Company is yeah, I do trouble. That ratio it's obviously I want the safer investments, but even if it's above 0.5, it doesn't mean it's a bad investment. They're using that money, or they're taking on debt for the sake of growing their company. It's just a matter of make sure, whatever they're taking on debt for, try to go identify that. Try to see what they're doing with that money to grow their company. Because some companies, a lot of these teams out there, they have these brilliant ideas. One of these value investing groups I'm in on Clubhouse, I was talking about this with them last night. A lot of these companies, they've got these brilliant ideas that are really shitty ideas. That's what you gotta watch out for. I need to find out how should I specify what they do. Biggest Brazilian company engaged in business, retailing of food, goods, home appliances, other products from the supermarkets, home appliance stores owned by the French conglomerate retail group Casinos. Headquarters are in Sao Paulo City. Retail. Specifically food, general merchandise, electronic goods, home appliances, etc. Okay, this is current as of 3/23/2021. Price we saw a second ago. Let's go update this. Make sure we got the most accurate, or updated price. We get the most accurate market cap on it. 533, I believe, what we're gonna get. Yeah, that's what I noticed with Google is this price always is updating, but the market cap, it only updates when you refresh the page. 0.35, looking at $1.43 billion. Let's get into the numbers. Let's exit out of this one. Alright, current assets, so we're going to have to convert these at the end. Looking at the consolidated, 2019, 2020, it's going to be in millions, so we'll add 6 zeros at the end of this. current assets, those are most liquid. We need our total. Looking at 53 billion, 295 mil. Previous year end, we were at 58, so we were up. So we are down this year. We'll see how many in dollars. Then they can do math. Alright, I will calculate. I will calculate, my friends. Give me 1 minute, please. I punched number, I put in sheets. Let's good go. 18483 plus 18055, 36488. So 36 billion in liabilities. We'll see what that equates to in dollars. And then previous year end, we were looking at 23,135 plus, oops, plus 21,792 equals. So our liabilities have been reduced as well, which is great to see. 927, 123, 456. All right, debt ratio is above 0.5, but like I said a second ago, not the end of the world. I hope we can put that away. Total current assets we need first. And this number is 17,641, 123, 456. Beautiful. Our current liabilities are this number, 18,483, 123, 456. So our ratio, we are not liquid right now. We are below 1. We were looking for anything above 1.2. We are below 1 here in terms of liquidity, so we've got to make some moves most likely. We need shareholder equity though. Total shareholder equity is 16,807, 3, 4, 5, 6, and the previous year's end was 13,548, 3, 4, 5, 6. So we've gone in the right direction there. Outstanding shares is where I said I'm going to need to do some calculating over here. It's going to give us a rough estimate because they don't specify it on there, unfortunately. We can divide this. This is how you find outstanding shares, and you can do this, equation backwards. 533 is what we started plugging this number in. So about 200, we'll do 268, 292, 683 is what we're going to find. That to be, this is for their, I believe this is their Q4 2020. I'll confirm in a second. Oh, this is the annual. So year ending 2020, year ending 2019. Okay. I wonder if they've got their interesting. All right, so it's the annual. Annual. It's going to be top line up here. They give us their net instead of their gross. Not a big deal. It's going to be in millions as well, so we'll have to convert that at the end also. But we'll add 6 zeros at the end regardless. 51 billion, 253 million. right? And then 2019, we're looking at 28,838. And just repeat the numbers. Okay, net income now. Can be found down here. Net income for the year. Bottom line. 2326. That's 6 zeros at the end of that. Previous year was 836. So I believe our profit margin should be going up if I had to guess. And let's just copy and paste these numbers over here. I'll bring it over the other screen in a second after we've got a couple more things plugged in here. All right. This down for a second. Then we need rands to USD. 0.18 is what we're multiplying by now. Okay. Ignore these ratios for right now. They're not going to be accurate until we convert. 0.18 times that number. Oops. Let me go double check really quick. Actually, I'm not positive if this was including any preferred shareholder equity, share capital, capital reserves, other comprehensive income. Okay, so I don't believe it does. Yeah, there are no preferred shareholder. There's no preferred shareholder equity, which is good for the book value then. Alright, so here we're looking at profit margin for the entire year 2020, entire year 2019, same things repeats over here. Unless specified otherwise. So yeah, we're looking at 4.5% profit margin this year versus a little under 3% in 2019. So it was a great year, comparatively speaking, for the company. Let's go ahead and look at our ratios, see how those checked out. Current ratio, like I said, below 1.2. That is room for concern. They're not liquid, right? They need more. They need more liquidity. They're not a new company, which is relieving there. They've got enough assets in their pool, so they're going to need to liquidate something though, in order to get that back up to 1.2, where it's considered healthy. A lot of companies that have been established for a long time, they'll have current ratios, so levels of liquidity strategically as close to 1.2 as possible. There's no room for concern there typically. Yeah, just something to keep an eye on though if you're looking to invest in this company. Debt to asset ratio is above 0.5, meaning they're financing their operations mostly off of debt and form of liabilities versus equity. So this is considered typically a riskier investment. Like you can see the ones above it, 0.18, 0.12, 0.17. Those are way less risky investments because they're financing mostly off of our shareholder equity. They have a big asset pool. They don't have a whole lot of liabilities. They have a whole lot of money to play around with. And when we're shareholders and we're not getting dividends, we want them to play with that money. What happens when they play with that money and they have good ideas that they invest into for the sake of growth of the company? Company grows, our money grows as well, our shareholder equity grows as well. So we like that. But if they're financing mostly off debt, not unusual. A lot of companies do this. If it's above 1.0 or if it's 1.0, these companies are what we call insolvent, right? They've got liabilities that outweigh our assets, which generate a shareholder equity that's actually a shareholder deficit. It's negative, right? So if you go over here, you'll see that with this company. This is Clover Health, one of the Chamath plays that I just can't stand. I don't think it's a good play at all. So I love Chamath. There are some things I disagree with him on. I think healthcare is ripe for disruption. I don't know if Clover was the company to do it though. He might even tell you that. But you can see when they're above 1.0, that means that our equity is not worth anything. We're insolvent as a company, so our equity on paper, we don't have a book value per share. It's not worth anything. You can see that right here. Negative $2.51 is what our shares are worth on paper. For CBD, our shares on paper are worth $11.28. So this is an undervalued company, guys. You know, it's below 1.0. It's price to book. You're just taking the current stock price, what you see over here, dividing it by the book value per share. This is just going to be our total shareholder equity minus preferred shareholder equity if it exists, and then you're going to take that outcome and divide it by the number of outstanding shares. This gives us $11.28 is what our shares are worth according to the book, according to their actual numbers, and it's literally double what we see today. So this tells us this is an undervalued company. It's actually being run very well. I agree with a lot of what they're doing. This is, as a value investor, this is a company I would invest in. Especially at this price, you can get a lot of it. QD was another one, I believe. Yeah, they're worth double what you see today. Yeah, I'm looking for anything below 3 typically. Is something that I'm interested in. So CBD, another great find, Savvy. Everyone give Savvy a round of applause. Great find. All right, what Spac should we look at next? There's another one that had a DA today. Did I already copy this in there? I think I did. So what are my notes? I'm going to say... Assets decreased. Liabilities decreased by more. Debt ratio above 0.5. Current ratio below 1.2. Revenue increased substantially, almost doubled. Profit margin almost doubled as well. Does this all make sense to y'all? Hanks, what's going on? How are you, my friend? You making some money today? What do we got? I believe shareholder equity increased. Let's see what it increased by. By about 600 million. got debt ratio, debt to asset ratio is above 0.5, indicating operations are being financed of debt. This year, current ratio is below 1.2, indicating what else do we got? We had current ratio below that, debt ratio above 0.5, revenue doubled in 2020. Profit margin increased to, what was the profit margin? 4.54. 2020 versus 2.9% in 2019. Last but not least, P/B ratio is below 1.0, indicating undervalued. Share is all right. There we go. It's a consolidation day, exactly. That's the best way to look at these days, right? We do need them. They're healthy. All right, let's do this one. It's CHAQ. This is another DA today. I wasn't too excited about this one. If you guys have anything you want me to throw in here instead of this one, because I wasn't really, impressed with the numbers I was seeing on it in the beginning of the stream, so I kind of been avoiding it, but it would be good to see it, I guess. If you guys have anything you want me to do instead of this one, or another Spac or something that we haven't gone over yet, throw it my way. As long as there's an offering, as long as there's a merger target announced, and I can look at an investor presentation, I'll do any Spac that you guys are interested in. It's the name of the game here. anyone understand anything about gene therapy? Because I certainly don't. And if I don't understand gene therapy, I am not going to be buying anything from this company. Um, this does not look like an investor presentation. Where's the transaction overview? There it is. All right, they're valuing it at what? Enterprise value $84.6 million. After the transaction goes final, it'll be around $200 million. What are we getting in this? What percent? If you guys are saying this is really blurry right now, it's really blurry for me too. That's why it's taking me a minute to read. You do what, Savvy? This is CHAQ. This DA just got announced today, Savvy. ABED. Okay, we can do ABED. Yeah, I'm not seeing anything with this that really tickles my fancy. Very, very confusing. Preclinical stage, yeah, I don't want anything to do with that. That's gonna be a lot of R&D. That's where our money's gonna go. When you invest in companies that are pre-revenue guys, especially these science ones, space ones, you're investing, your money's going into R&D, research and development. And if you're okay with that, you're okay with that. But you don't know if that's ever going to turn into money that comes back to you. Let's look in here and see if there's any other sexy plays we can look at. HAPP. Put it in my back pocket. I want to see if there's another Spac I can look at real quick. GIK shareholder meeting to approve business combination with Lightning E Motors. Okay. Expensive DD. Okay, gotcha. Gotcha from Spac Track. Oh. Oh my god, watch the hedge funds burn. The hedge funds are gonna fuck us, guys. That's how I kind of see this all unfolding. I think the hedge funds are gonna be what triggers the collapse of the economy. Um, yeah, the Velo 3D Spac, we went over that in the beginning. Trouble, I think you joined in here after we went over it. But yeah, the Velo 3D company, I liked a lot about what I saw. I don't know enough about 3D printing just yet to just kind of make a snap judgment like that of when I add it to my portfolio. You know how I'm very particular in uh, the what I add to my portfolio. I only have 3 companies in there currently, and 5 is kind of where I see that cap being. But that will be added to the spreadsheet on my website tonight for y'all. I liked a lot what I saw. I liked their customers. I liked their investors who are backing them. I liked their partnerships. I liked their existing money, their position in the market, their competitive advantages from what I could understand. A very nice investor presentation, very well put together. Been getting spam calls like crazy. If y'all been getting these texts from Amazon every fucking day, like multiple times a day, that you just won some second place or won first place and you have like an Amazon gift card or something, because that's like me and my friends have been getting blown up with those. I just don't know if it's becoming a problem like all over the world and country, or if it's just around here. But it's been a lot recently, this past week especially. I don't see any other DAs in here, so let's do this one. I'll do half another time. Trouble, if you want to bring it up tomorrow, I'd love to do it for you. But I do want to, Spac hunt. We only did 1 Spac today that we hunted for the most part, so I want to get 1 more in here. Let's see, FRX Beachbody. That's one that Savvy brought up the other day. Let's see. I don't know what Skillsoft is. I don't like Churchill Capital. That CCIV merger kind of put a sour taste in my mouth. What's CCIV trading for nowadays? But I tell you guys, I still think it's got room to fall. I think it's going to fall to about $15 to $20 when it's all said and done. It's been kind of teetering around there, hanging pretty. It got close, 22. Climb back up. But I've been saying 15 to 20 since I saw the deal terms. All right, let's do FRX. You cool if we do FRX, Savvy? Probably be our last one of the day. So we have our transaction overview in here. It's the right presentation. Yes. All right, beautiful. I get my sheet up, brought it over here. Okay, what does Beachbody do? The leading holistic health and wellness platform that delivers results. Health and wellness platform. Alright, where was that transaction overview now? There. Alright, what's our enterprise value? Enterprise value is slightly under 3 billion, 2.934 billion. Equity value after it's all said and done, 3.425 billion. 2021. Three companies in one. $10.37 today. $388 million market cap. 10.73. Okay, that was yesterday. 388,804,000. Right, let's get the hell off this page before it slows down my computer with everything Yahoo tries to load. Right, now we've got public shares. Jesus, what the hell is this? Existing owners, I think. Hype, we don't have to worry about. 1.1, 8.8, we're getting 9.9% total. Giving us a, even with this little price movement, we're looking at a post-merger adjusted market cap of almost $4 billion. Still, I mean, it hasn't moved, obviously, so there's opportunity here. Let's go see if we like the company. All right, financial overviews next. That table for us would be even better. Well, if they're not going to be so generous. Oh well, this is fine. I need our actual revenue. This is in millions. This is a EBITDA. We don't care about a EBITDA. Millions. All right, we'll start with 2019. It's going to take us all the way to 2025. So we'll do 2019, we'll do 21, 23, 25. 2-year gap in between. Right, we did. How do we understand this? This is digital subscription, nutritional products. So subscriptions are even better. That's money we can count on typically. All right, we did 756 million in 2019. In 2021, we're supposed to do 1.112 billion. 2023, 1.958 billion. 2025, 3.294 billion. 2021, 2023, and 2025. It's going to give us a compound annual growth rate of 756. I hope this is within its range. 32.94. And we're doing that from 2019. So we got 2020, 1, 2, 3, 4, 5, 6 years. All right, 20. That is not correct. Those numbers are in backwards. Hang on. 756, and that's going to 32.94 in 6 years. 27.8. So it's pretty conservative growth rate. I have to look into the numbers always, but that's very conservative compared to most companies you see nowadays going public through Spac. Well, the reason I love Spac too, guys, I told you, my interest is, I'd like to get into private equity venture capital at some point, so I'm training myself to have the right thing, or to look for the right things, kind of investing the same way that they would. And SPACs offer us the best opportunity to get into like private equity kind of companies before they go public, because a lot of these companies we're seeing going public nowadays through SPAC wouldn't ever be going public at the stage of their company otherwise in traditional history. A lot of pre-revenue companies too. I don't like the pre-revenue companies, but yeah. So that's another great thing we're seeing with SPACs now. It's just new opportunity for private equity almost. Leadership team, slide 26. That. Nutrition project. NYX, what is that, Savvy? Is that going to be included in this presentation, or is it about to get really confusing? Online fitness market is expected to grow from $6 billion in 2019 to $59 billion by 2027. I kind of believe that. So slide 7 might be noteworthy for us. Oh, NYX over here. Total health. Got it. Interesting. Growth and investment opportunities. Okay. Leadership team, where we are, where we're going. Cool. So we're not going to do a good job of defining what our total addressable market is. Size of our pie. It's not going to be 1.5 trillion. Let's see if we can find it in one of the slides above. If not, we'll have to go with that bottom right number there. I don't see, well, I did see partnership, but very interesting. Alright, we'll have to go with that one then. So, online fitness market, $6 billion as of 2019. We're going to have to roll with that one for now. We'll put this in the notes. I know, Savvy, it's only the digital subscription, but there's just too many variables here. Like if they don't define it, it's not going to be our job to go find it. We got to go with the numbers they give us if we're going to stay consistent. Unfortunately, TM is $6 billion in 2019, projected to grow to 59 billion by 2027. Okay. Oops. Put this in here as well. See slide 7 in investor presentation. Okay. There's that. I think this is a partnership I consider. Social commerce, that was my first company. It's all around social commerce. It is powerful. Not as powerful, I think, as we thought. Interesting. Partners slash acquisitions. Demand, fitness, content, fitness influencers slash celebrities. MYX, fitness. On slash off bike fitness solution similar to Peloton. So it looks like they're trying to compete against Peloton, like in this all-encompassing solution, which I think is very smart, a very smart strategy. Peloton has its limits, but people love it. If you've ridden on a Peloton, those things are dope also. But yeah, if you can combine more than just the bike, I think there might be something here. All right, competitors, probably last slide we didn't get to. There were, those aren't competitors. So I'm not going to do Netflix, Disney, and Spotify as your peers. Come on, get real. Uh, Connected fitness I can do. Peloton. Growth, consumer, health, and wellness. Planet Fitness, Fresh Pet, Chewy.com. Bellring Brands, and the Simply Good Foods Company. I love the name of that. Every time I see it, I love the name of that. I love the logo. Yeah, we can roll up that. Valuation, benchmarking. Don't ever compare your valuation to Netflix, Spotify, and Disney. Just an FYI, everyone's starting a business. I don't know how they got the investments that they did. I don't know. I mean, I think it's a fine company. I think it's a great idea. But if I see that and I'm an investor and they're comparing themselves to Netflix, Spotify, and Disney as valuation benchmarking, or for the sake of valuation benchmarking, we all know, even as very basic level investors, that this company is not even remotely comparable to these three. The only thing that's similar is they have a subscription service. These, yes. All right, let's go take this overview over here. So, Abby, what do you think? What do you think I'm gonna think? And just give me your raw thoughts too. Obviously, you're an investor, so you gotta like the company. Um, SaaS and platform SaaS and food. Okay, they're giving them $3 billion valuation in a market that we know right now is roughly, according to them, about $6 billion. We know that there's other aspects to it too, but they didn't specify, so we don't really know. We're not going to go do our own research there. We obviously we could do our own research there, but there's too many numbers to figure out. 3.4 billion is what it's going to be worth after they give them the money based on this, plus the money they're giving them. 3.4 billion is the equity value now of the company after the merger goes final. At $10.37, the market cap we see is 388.8 million. This is what kind of ownership we're getting. So it's going to give us a post-merger adjusted market cap of $3.9 billion. In 2019, this is what we love to see as an investor, right? One of my companies Very similar revenue, very similar growth path, a little bit quicker. This is Renew Power I'm talking about, but similar metrics here. $756 million in existing revenue. We don't want to touch pre-revenue companies. We were considering this one above at 19 million of existing revenue, and this one in 2019 did $756 million in revenue. So we love that. Our company should be safe. Going forward to 2021, they're expecting that to go over $1 billion for the first time, so 1.1 billion. 2023, almost 2 billion, and 2025, almost $3 billion. So 2025 will give us enough revenue to basically, the revenue will be equal or a little bit lower than the market cap we're actually seeing today, which is great to see. If you believe that this number is going to happen, it's a pretty conservative growth rate. I do believe what they're doing could be a realistic competitor for Peloton. And a lot of these at-home workout solutions, I think that this kind of opened eyes in the past year of people who say, I could work out at home. I love going to the gym. It's just, I can get my mind off of things. It's a nice form of meditation too, where you're away from work, you're away from family, you're away from friends. It's just you and your solitude, and you're just pumping some iron. I don't think I can get that same workout at home. At least I haven't been able to, and I've tried. But I've never had a solution like this. But I am only me, and I don't know what percent of the population, resonates with my thought process here. What percent of the population likes going to the gym and paying for that membership, right? So obviously the numbers are going to be up during the pandemic. I think that's why they're going public now. I think that's why Peloton blew up this past year. They're kind of trying to seize that opportunity before people start going back to the gyms. Peloton's numbers will start to slip, and theirs will too. The question is how much. Other than that, those are very conservative growth rate, I'd say. And that 756 million is from 2019, which, as we know, the pandemic had not happened yet. $6 billion market cap, projected to grow to $59 billion by 2027. This is strictly for digital subscriptions, for the at-home gym solutions. What other thoughts that I have on this? What else? Existing revenue of about $750 million in 2019. Projected to grow $3 billion by 2025. Public shareholders and sponsors/founders are only getting fined 9.9%. Cool. Yeah, 9.9% company. Yeah, pretty cool. any positive price movement. So what I mean by that, and I'll show you in a second, company strategy. Peloton perfectly. So watch what happens when I change the numbers over here, guys. Is what I mean when I say it will change drastically. I can do a Control Z, so not too worried. But let's say this goes from. It's gonna be difficult to do this without. Let me just find the outstanding shares first. Okay, here we go. At least a rough idea. Let's take the market cap 388,804. Let's divide that by current price that caused that 1037. To give us 37,493,100 and we'll call it 54. We'll round up because we know it's not going to be even zeros at the end of that. 154. Okay, so let's take 1037. Let's say that hits 15 bucks. Let's multiply that by 37,493,154. This hits $15, and this is going to hit 562. So you see what that did? It just changed it from, it only went from 10.37 to $15. Changed this, not that much, but what did that do to the post-merger adjusted market cap? It was just 3.9 billion, and now an increase of $4 just shot it up to 5.6, almost 5.7 billion dollars. That's big price movement. Those are the kind of metrics I was worried about with CCIV, if you remember. You know, we need to know the terms of the deal. We're only getting 10% of the pie here, so any kind of price movement we see is going to have a pretty substantial impact on it. Let's see what happens when you raise this to 20 bucks. And all of a sudden you're staring at this post-merger adjusted market cap. Oops, 20 times 37,493,154. Changes it to $7.5 billion. Now all of a sudden you're sitting at 20, and I'm saying this is probably worth, you know, what they say it is. Sure, I'm looking for anything typically 2 to 3 times this is what I consider healthy, so you're still within that range, but you're going to quickly work your way up. And the reason I can justify this equity value is because their projections by 2025 take them to that much in revenue. I'm totally okay with that. Just something to keep an eye on, though. We'll change these numbers back. That's right. Okay. So just going from 10 to 20 is it's gonna double that. You know, that's all you gotta know. I don't need to do any complicated math here for you. Just know that number is gonna double every time that this number increases. 10 to 20 will make it 7.8 billion, or like 7.6, I think is what we just saw. It goes to 30, that's gonna become like 11 billion. And at that point, I don't think it's worth that. That's where it might cap out. So I don't know, what is Peloton trading for today? I think Peloton's probably overvalued still. Make sure this is on there real quick before I leave the page. Yep. Okay, let me save this also. Let's see, Peloton. 115, $34 billion market cap. I think that's probably inflated. You can see their PE ratio is way up. 10 to 20 is typically healthy, guys, for PE ratio. It's not what I look for my metrics, but look at for my metrics, but 10 to 20 is what you want to see typically for it to be healthy. This has a lot of growth priced in there. $34 billion. Peloton is not worth $34 billion. I can guarantee their income statements and their balance sheets are not going to tell us they're worth $34 billion. I can do P time another day. It's 1:30 my time right now. I do have some work I got to do. But, you know, been streaming for about 3 hours now. Thank you for hanging out with me. What did I do? I got it's been 2.5 hours. Almost 3 hours. So yeah, thank you for tuning in with me today, guys. I appreciate all the love and support. Love y'all. Hope that y'all are making some money. I know it's a red day. I know we're bleeding, but hang in there. You know, we're out here finding some good plays. Gonna have some new ones that are added to the sheet tonight. Let me go ahead and cross this one off there for us. If you have any questions, you know, as always, you can find me at any of the links in the description below through my link tree. You can find me in the Discord. Just make sure you tag me and whatever. And honestly, the best way to contact me in Discord is going to be personal message. I answer all of those within 24 hours typically. Quickest turnaround. Otherwise, it just gets buried in all the other mess in there, which I know that they're working on improving based on who I was talking to earlier. But yeah, that's what I'm seeing today, guys. Hang in there. I know the market's scary. I'll be back tomorrow. You don't have to worry about me going anywhere. I love days like this. These are days for opportunity. No one else is looking for opportunity. Everyone's scared. We know what we're doing. So, with that being said, I will depart for the day. If you haven't already, please smash that like button, smash that subscribe button, and ring the little bell next to it so you get notified every time we drop new videos and every time we go live and we're making money up in here, which is every single day the stock market's open, folks, even when it's bleeding red. All right, y'all. Love y'all. Appreciate the love and support. I will see y'all tomorrow, and I will see